big thing.
Anuj, it's our favorite time to go out there and connect with all those people who have questions.
Surabhi, this is my favorite part of the day, interacting with our audience.
Tune in to find out what could make or break your trade. NSE Closing Bell at these times on CNBC TV 18.
Closing Bell, presented by National Stock Exchange, in association with Fine Cure Pharmaceuticals and Punjab National Bank.
This is TV 18 and you're watching CNBC TV 18.
Hello and welcome to Taking Stock. What a week it has been for the markets, really. Gujarat elections take a center stage on Dalal Street. It was quite a good rally towards the end of it, thanks to those exit polls. Though the indices, of course, did come off the highest point of the day on Friday. Now, all eyes on the actual numbers, which would be out on Monday. Whether or not they will actually tally with the numbers that have been thrown up by those exit polls. Hello and welcome to Taking Stock, the election special. I'm Surabhi Upadhyay, and with me, as always, is Anuj Singhal. Anuj, quite a roller coaster. I don't think this week was for the faint-hearted, was it?
It wasn't, even though by the end of the week, Surabhi, it will look like the market was flat, 0.5% on the Sensex and Nifty, down about 0.5% in the mid-cap. Trust me, either if you're an ace trader, you would have made a lot of money this week, or you would have had your trading account busted this week. It was that kind of a week. And as we discussed, there were too many variables. On Friday, we only spoke about exit poll, but before that, the Fed move, crude oil went to 65, back to 63. Global cues were all over the place. On Friday, they were down. Advanced tax numbers. So all these cues. My sense is that the near-term move, and I want to make a distinction here, the near-term move, Surabhi, on the Gujarat outcome is now priced in. And this is, we are assuming that exit polls are right. That is a big if. If that's not the case, then, of course, it's a completely different dimension altogether. But if the actual results match exit poll, in that case, the medium-term to long-term outlook for Indian market becomes very strong because economy-facing stocks will start to do well. You'll see a lot of reform move. You'll see a government going all out. That's my sense. And also one more thing. This week, what was interesting was that the leadership was back with stocks like HDFC Twins. HDFC Bank made a new all-time high in trade. HDFC was nearly there. I think the market would like that. When strong stocks, HDFC Twins, Maruti, they make lifetime highs before the market does. It's a matter of time before the market also does that. So perhaps next week we have a date with all-time high.
Okay, let's see if that can actually come through. We've got plenty to talk about on the show. It is indeed a packed 21 minutes and lots of big voices. Andrew Holland, CEO of Avendus Capital Alternate Strategies, will be joining in to discuss the election impact on the market and the way forward. You will also hear views from the likes of James Sullivan of JP Morgan, Kathleen Gingold of Kartika Capital, Sameer Arora of Helios Capital, and Jeff Chaudhary of LGM Investments. And as always, we will, of course, have our technical expert, Mitesh Tucker, joining in to help us understand the trading print for next week and a couple of interesting ideas.
Oh, yes. So joining us on the show then to discuss the market, of course, we have Andrew Holland, CEO of Avendus Capital Alternate Strategies. Andrew, always good talking to you. So, of course, you have seen many elections. Sometimes they have been binary events. Sometimes we just take them in this, our stride and move on. Your thoughts on how important the Monday outcome is from market's overall health, and where do you see this market moving from here?
So, assuming that the exit polls were correct, and unless there's a huge positive above those kind of polls that we saw, then I think the market pretty much is kind of saying, we're happy with what's happened. I think the good news is, if those figures are correct, is that it's a kind of vote for Prime Minister Modi and his reform process, particularly in Gujarat, where there's a lot of noise around being one of the hardest hit, particularly with GST. So that's what foreign investors will take cues from and feel that the continuation of a strong government will be there. Of course, if the polls are wrong, then it would be a huge negative shock for the markets. But I'll work on the basis that the polls are right, but the market's probably priced most of that in now.
Okay. So, Andrew, to expand on that point further, I mean, if the final result on Monday is very similar to what the polls have thrown up, then what for this market? Do we go back into a consolidation range? Or do you actually see some triggers on the horizon that could help us take out the previous all-time high?
I think we go back to the global cues, and the global cues, as we've known for some time now, is all about liquidity. And despite interest rate hikes in the US and elsewhere in the world, it hasn't really impacted either bond yields or markets. So as long as the global factors are still positive, then there's a real possibility we could try and test new highs. That said, I don't like liquidity-driven markets, so I'm still nervous about them. But until some trigger takes global markets down, then we'll continue with this happy Goldilocks scenario, and obviously we're all in the kind of Christmas spirit now. So we might see a reasonable run towards the end of the year. I think going into 2018, I remain more optimistic on earnings growth, and I think that's what will keep the markets kind of held up, despite global cues, maybe kind of taking markets down in the short term. So I think, again, I'm kind of in that kind of middle road of very short term. I still feel nervous with liquidity-driven markets, but more in the medium term, I'm more enthused by both global growth in the world, and also earnings growth in India. So you've got to try and marry those two. But it's been, I was listening to what Anuj was saying in terms of this week's been a very difficult week. And maybe we're just going to face a few more difficult weeks going forward until we get the catalyst which, fundamentally moves the market higher, and that has to be earnings growth.
Oh yes, of course, for now the market would be betting on that Santa Claus rally as well. But Andrew, in that case, how net long are you right now? Are you 60% long, 70% long, or are you looking to add some more shorts? Especially as we head into the new year.
No, we're pretty much towards 45–50% hedged. Obviously, we took out, as a lot of people did some time ago, some protection against the kind of possibility of a more negative result coming out of the voting, but that seems to be now behind us. So I think until some catalyst globally takes us down, which there's been many of them, Anuj, as you know, and nothing seems to get us away from the buy and dip strategy. So until that does, we just have to go with the momentum, and the momentum is still very strong. And as I said at the beginning, if this is a vote for the BJP, then I think foreign investors will like what they see, because it's the continuation. And going forward, I think what we're all expecting next year is the government to focus on rural spending along with infrastructure spending, and that should be a good catalyst for the economy as a whole. So we think earnings could grow at around 15% next year, which is probably what we was going to happen before demonetization and before GST. So I think we were just going back to a normal kind of growing economy, and the earnings should show that as well.
Andrew, then how are you playing the impending infrastructure recovery? What kind of companies and stocks are you looking to buy?
No, but unfortunately, they've all kind of run up quite a lot, actually, ahead of it all. So, we're sticking to our kind of strategy, which we've been playing throughout, which is the private banks, FMCG, and affordable housing. And I think those are the three sectors we like. And add on to that, obviously, the kind of the auto sector as well. I mean, selective autos. And some of the parts players, and that's how we're positioning the portfolio, for next year. I think, I don't really want to play the infrastructure, so high, because, when orders come, they don't get executed for some time. So it's just a help for the buoying of the economy and the good factor feeling that we'll have. But against that, we are going to be challenged by higher oil prices, higher inflation, higher fiscal deficit, GST, which is not revenue neutral. So there's lots of negatives out there as well, which can play out once we see any correction.
This auto rally has been phenomenal, Andrew. And, essentially, you can boil it down to, maybe the top passenger car maker, 2 or 3, maybe two-wheelers. But valuations, how can you justify, some of these stocks now trading at 35, 40 times, essentially getting almost FMCG valuations?
Well, it's one of the few sectors where you're going to see continuous growth, despite where we are in the economy at the moment, and we're seeing that. So it's a good long-term story. And unfortunately, there's certain sectors where valuations are still very high. Say infrastructure in some of those companies where we're not really seeing any kind of uptick in their kind of earnings. So there's a dichotomy between the two, but everyone's saying, okay, well, I know a Maruti, for example, is going to do well because of these products and what the the new models are bringing, and therefore I'm quite happy to pay that kind of PE. Whereas on the other side, for some of the infrastructure companies, you're still waiting for the orders to come through, and then the execution, and then earnings. So, I'd rather be on the side where I can see earnings growth in front of me, rather than I have to wait for it.
Andrew, where are you on this whole NBFC puzzle? Because with the bond yield moving to about 7.2, I think it even touched 7.3 during the course of the week. One is wondering how the impact is going to play out. Some of the companies we speak to maintain, a strong face, and they say that margins won't be hit. But, I mean, what's your thought?
So I think margins will be hit marginally, but I think overall the growth in the sector will offset that. So I'm a little less worried. I think bond yields at 7.2 though does bring us back to the banking sector and recapitalization and how that's going to play a part, because as the economy grows, we really need the banking sector to be there to be able to buy into it. And apart from the private banks, you really don't have that. So I think until that changes, I think the NBFCs will continue to take market share from the PSU banks, who really don't have the capital to go anywhere at the moment.
Okay, Andrew, stay on. We have a couple of more queries for you, but we have to take a break. And of course, we'll resume our conversation with Andrew Holland. Of course, after the break, Mitesh Thakkar will also join us and tell you what to buy or sell next week. Also,